Hey traders, welcome to Charts and Coffee. Great to see everyone. I've got a massive mug of coffee in my simpler trading. What are these called? Oh, Yetis. Working some iced coffee this morning for some hot market action. We just wrapped up a session in the Sector Secrets Mastery where we walked through some hot zone trading. And what we did was we shorted the NASDAQ with the volatility of the CPI. I actually, a lot of folks ask, Rog, do you trade news? And, I think this is a really good way to differentiate what any kind of release is. And this could be the hot zone of earnings. This could be the hot zone of an FOMC speaking event. This could be the hot zone of non-farm payroll. It just happened to be the PCE. I still don't know what the number is, which is to say it's not the data, it's not the news that we're trading. It's the reaction to it. And if that reaction triggers a level, then I was already, in this case, using hourly price movement ranges to measure, then I've got a trade. At some point, I'll circle back and look at what the year over year and month over month PCE was. But it's really a reaction. So the difference between hot zone time and hot zone data, I'm trading the time of the release, the volatility that it triggers. So we just wrapped that up in the room and pretty fun session. So that's always look, there's nothing like a little bit of volatility to stress test our process. And that was a quick short, hit the initial target. We've got a break even or a tighten stop, and then we'll see what the rest of the morning brings. We are still trading below the previous session close. We are still trading below where we closed yesterday. All right. And ultimately, what we are doing is, as we get ready for the open, we're asking ourselves a couple basic things. Did PCE rally price above the previous session close? Did PCE manage to stay above things like the 200 propulsion? What are the candle colors that we're posting right now, that we're printing right now on the index, NASDAQ, S&P, Dow, bonds, things of that nature? In fact, let's go take a look at the aftermath in terms of yields and the US dollar. So we can take a look at the ZB, or we can take a look at the ZN, so the long bond and the 10-year. So take a look at the long bond here. Very volatile action. I do not recommend trading currencies or yields, treasuries, with hot zones like the macroeconomically massively important PCE. But ultimately, what we do have in an environment like this is a lot of movement around what does that inflation metric mean to the Federal Reserve, and does that increase the probability of rate cuts sometime this year, right? We don't need to know necessarily when they're going to happen. We just need to have the certainty, right? The certainty that it is going to happen. So David's asking, for trades like that, do you buy a put? No, trades like this, David, are absolutely, for me, straight up futures. It could be micro, it could be mini, but it's straight up a futures setup. It's quick. I'll park a limit order, and that's the way I look at things like that. So bonds responded initially with the move to the upside, and now we seem to be climbing, which means yields are going down. Look, yields going down coupled with, let's take a look at the dollar via the euro. So this is an inverse or negative correlation. If euro's heading lower, that means dollar's heading higher. But if euro's heading higher, that means dollar's heading lower. Really not a great clear picture on the euro yet, but bond yields are starting to move back down as the long bond futures are moving up. All right, so I can't say we got a lot of clarity on that PCE being a needle mover, but we'll get another move. What I call it the echo. We'll get an echo of that 8:30 a.m. Eastern hot zone at 9:30. All right, we'll get that reaction. So because think of it this way, at 8:30 a.m. Eastern, who's able to access the market with liquidity? It's the futures traders and it's the Forex traders. So stock traders, market's closed. I know this pre-market, but the markets are closed for all intents and purposes. So at 9:30, now another group of traders, in this case at the bell, are going to be able to react to the thing that happened roughly an hour ago. So keep that in mind in terms of when you're looking at the reaction of any 8:30 pre-market event. There's a whole other group of traders that really didn't have access, and now they'll be able to say, oh, that data was good, that data was bad, and respond. Generally speaking, again, if I take a look at the NQ or the ES, are they rallying? Are they going to want to get above the previous session close? Don't know, but for now they sit well below it. But this is still kind of a bearish sentiment environment post PCE. All right. Okay, the next thing is, and by the way, if y'all have any questions, I have some questions on IBM coming up. Sure. I don't have any skin in the game in IBM, but let's go take a look. So IBM is a post earnings, right? We had the earnings, you can see here on the 24th, today's the 26th, after the market. So that means the first session that was able to digest IBM earnings was yesterday. So today would be the first time that I even consider if anything there is to do with IBM. So I don't play the earnings, right? I'm not looking to play the reaction to earnings. Well, we can play the rally, or in this case, the weakness, whatever it is. I don't have, like I said, I don't have any skin in the game here. But what'll be important now is if IBM bounces into a resistance zone, because IBM's been a downtrend, right? I would not go into earnings or even the environment into earnings IBM bullish. Take a look. How long have we been in a downtrend? Since the 18th of this month. So take a look at our multi-structure here. This is this right in there. So you might say, Rog, we actually went magenta color on the 17th. I wait for 2. So you'll notice the 18th, that's the confirmation of the downtrend. That's bearish, gang. The only thing that I'm even allowed to do in a market that's structured like this, red candles, downtrend confirmed on the multi-structure, is long puts or short shares. There's no buy to be had here. In fact, we haven't seen a green candle, which is a bullish candle in the top tier system, since the 22nd of March. Lots of neutral. We got the first bearish candle on the 4th, and then a pretty steady stream of bearish actually a very steady stream of bearish candles since the 10th of this month. And therefore, there's no buy to be had here for me on IBM. Rather, if we rally, short into the rally. So thanks for the question on IBM. Let's see. Oh, and since we're starting off charts and coffee, let's jump on over to our look at the Fed Fund futures in the aftermath of this data. This data hasn't created a lot of adjustment to a higher rate cut or, frankly, rate hold scenario any greater or less than it has been. So there's no significant shift here at all. In fact, if I jump out to December, it's still really largely a 1 or 2 rate cut by the end of the year. So what this means is by December 18, either on this meeting, we will have gotten our first cut, or on this meeting, we will have gotten our second cut or third cut. So the first cut probability is roughly 38.5%. Second cut probability is 30.5%. And if we were to have seen this as a third cut, that's only 11. So really 1 or 2 rate cuts this year seems to be where we're at. All right, the pup indicator is outside. I brought the pup to the office today. All right, hopefully she's not being too much of a headache out there. Must have found a duck or a squirrel. Okay. So if we are taking a look at this as both a trading opportunity window, which is extremely volatile, extremely high risk, and also a macroeconomic measuring stick, not much emerging from the macroeconomic measuring stick. Okay. Questions. All right, let's see here. What about FAST, F-A-S-T? This is a downtrend. So whether or not we fill this gap, to me, is secondary. Look, I know a lot of traders use gaps as a setup or use gaps as a reason for a trade. I would not. I am not a fan of that. Gaps are simply support and resistance. So I'm very seldom, think of it this way. And I don't know if you mean for a buy. So I'm not allowed to buy. And I think this is something I was just talking to the Trish boss about, which is this sort of perception that targets are trades, right? So if someone said, well, FAST could close the gap and go to say 74. All right, that's not a trade to me. That is just a resistance level based on a gap. In fact, the resistance level would start for me where the gap basically began at about 72 and a half, 72.30, that area. So again, it really just depends on how your trading is structured, but targets for me are not trades. And by the way, targets as trades is very commonly what most traders do. So again, everyone's going to be looking at the market in a way that's specific to them. But the problem with targets as trades is, what's the stop? What's the setup? What's the trigger for entry? Right? So that's why I don't like thinking about potential targets. More so, what's the structure? Therefore, what's the probability of movement? And the probability of movement in something like FAST is still down. All right. Thank you for the question. NTNX, sure. All right. NTNX, choppy. What do I think about it? Well, I'll look at the indicators. I'll look at the structure. It's a choppy environment right now. I would say largely bullish though, bullish chop. And why would I say bullish chop? The trend that preceded the chop was up. So I would look at this as bullish chop. What do you do with bullish chop? Well, barring earnings, let's see here. So earnings are what? The 22nd? Okay, so this is how I would look at something like NTNX. Where are my drawing tools? There we go. So here is Darvis support. Here is Darvis support. We've already come off of the support, and you can barely see them, but I'll show you the signals. See that right there? In chop, extremes at the oversold level would be at least a cue for our price levels at some sort of reason to be long. So that accompanied that. So that was really the initial, if you're looking long. And then if we come back down to that area, I would look for movement simply back up to the resistance of the zone. This is the support of the zone. And you could put an initial target or at least a move to break even in the mid. That's how I look at something choppy, but one that does have some sort of directional bias. It doesn't have a trend. Directional bias and trends are not synonymous. Directional bias simply means it's a bullish environment. A trend is it's an uptrend or a downtrend. So obviously, trends have directional bias, but directional biases do not need a trend. So that's a directional bias to the upside. All right, RCL, Francisco. So RCL, let's get the price. There we go. So what's the plan with RCL? What's the behavior? Not dissimilar to what we just talked about in NTNX. So same idea. It's the same setup. Am I bullish? Trend that preceded the chop was up, right? The chop, which is a neutral environment, is what we have. Is it bullish chop? Yes. Where is the support? And you go through the same process. Where are the signals? Where's the support? And then actually it's coming up on resistance. So I'd be very cautious. Going forward, I'd be super cautious here because that level where that yellow line is sitting here, just trace over it, that could be potential resistance. So I would not initiate a trade up near the top of the range. I would initiate, if at all, if I were, which I don't, I would initiate a trade near the support of the range. And that's the way I would look at that. So whether you were looking at the support through the Darvis low, whether you're looking at the support via, this is the anchored VWAP, right? Or if you're looking at a zone between, but that's where you initially initiate the long call, not up near the resistance. So timing is a thing, right? Timing matters. Timing is trading. All right. Tesla. All right. Tesla's been bearish all year. And even though Elon was able to sort of talk it up, it's a superpower that he has, I would not be bullish Tesla at all. It's choppy. Yes, it's bearish chop. I would not be. So the next, and I don't trade Tesla as a general rule. In fact, I don't like to trade stocks that are not moving with their sector or their broader average, right? I don't like to move take a stock trade in a symbol that's not moving with where it's weighted. In this case, consumer discretionary, the Nasdaq, S&P. Those are not looking at all like Tesla. Tesla's been either in a downtrend or moving lower all year long. You could say the same thing about Apple. Um, so I'm not bullish on Tesla in any way. However, there might be an opportunity to take a short if a red or yellow candle meets the gold zone. So I'm still very bearish Tesla. HUM post earnings. Red candles. Yeah, this is another one where, earnings or no earnings, this is a short environment. Earnings seldom will create a new trend. They can break trends, but they can't make trends. So, and this is something a lot of folks may not know. Earnings are a singular event that happen every quarter. We no sooner finish one earnings season, we're rolling right back into it. It's exhausting, and it's not beneficial to traders. Warren Buffett, Grandpa Buffett, as I like to call him, has had many conversations about the fact that the extreme reaction to earnings are one of the most difficult aspects to any kind of longer-term investment, to longer-term trading. It's unnecessary volume. And the fact that this has now become a thing is actually kind of sad, because once upon a time, earnings were not this spectacle, and now they are. And it really doesn't serve a lot of people. The greatest number of people are not served by making some binary, straddle on with options, selling premium, and playing some sort of straddle on an earnings play. I don't like earnings season. I wish they didn't exist. I wish it was the old-fashioned days where you just got an envelope in the mail with the earnings per share, the revenue, and the breakdown. But now it's a spectacle, and that spectacle creates a lot of volatility, and not always with the predominant trend. Now, after earnings, typically stocks go back to doing whatever they were doing before. But then, you have your extremes like Meta. Meta has largely been a pretty strong name. So folks ask, Rob, do you think Meta is going to start to climb back up? Yeah, I do believe Meta, based on what I see, right, that it's been mostly up. Meta had a shock, thank you, drama of earnings, right? Like middle school lunchroom. Thank you for the drama of earnings, but I would expect Meta to slowly start to move higher. We would need a trade, though, to justify that. Now we have Microsoft, for example, in these post-earnings assessments. Microsoft's been pretty strong, not super strong, but as of, you can see the 15th red candles, 17th red candles. So would I look for Microsoft to continue to chop? For the most part, yes. Earnings typically are a singular event where one or two sessions are dominated by the psychology of revenue and earnings per share for the quarter, and then it just goes back to whatever it was doing before, So if there was no trend before, I'm not expecting any trend after. If there was a trend before, earnings are capable of breaking a trend, but they're not capable of making a trend, right? Not usually. It's very rare. Okay, next up. That's why I call it noisy, right? It's not really information that's going to help us in terms of follow through. Gold continues to be absolutely a very clearly bullish environment. A trend anymore? Maybe not, but we've segued out. We've segued out of the trend. We've done this before. We've segued before. And this is where a lot of traders get into trouble. They look at the market as either in an uptrend or downtrend and forget really a truth of the market, which is if something's moving higher, it could move sideways for a bit, but that continuation or a resumption of the trend is more likely than a reversal of the trend. Too many people are thinking always about, where do I short an uptrend with a mean reversion? That's top picking. I know mean reversion sounds very sophisticated. It's multisyllabic. It's mathematical. But at the end of the day, mean reversion is just really become this very fancy jargon for, hey, let's pick a top in an uptrend. So let someone else put on the let's short strength play. We'll buy the dip, right? So the opposite of a mean reversion short of an uptrend, and the place that I want to be is in let someone else drive the market lower. We'll buy it on the dip. All right, gang, as always, thank you so much for being here for Charts and Coffee. I will see you all on Sunday for the Top Tier Outlook show at 6 p.m. Be good to each other. I'll talk with you soon.